Welcome to this explainer. Okay, so have you ever wondered how a company goes from just churning out run-of-the-mill, cheap commodity microchips to literally becoming the highly profitable architect of our electrified future? The semiconductor landscape has completely shifted from a period of scarcity to this sophisticated battle for efficiency, and standing right at the center of it all is onsemi. For potential long-term equity investors, understanding the sheer scale of their 2026 financial transformation isn't just interesting, it's absolutely vital. We're looking at the foundational, picks and shovels enabler of the entire global electrification movement.
To really grasp onsemi's 2026 valuation as a potential long-term equity investment, we're going to map out their journey across 5 core areas. We'll start with 1, from commodity to power architect, then look at 2, financial health and cash flow. Dive into 3, the Silicon Carbide advantage. Explore 4, AI and growth catalysts. And finally wrap up with 5, risks and long-term outlook.
All right, let's jump right in. Section 1, from commodity to power architect.
So, think back to the old onsemi. They were this high-volume manufacturer of basic discrete and analog devices. Sure, they had massive scale, but they were totally at the mercy of those brutal boom and bust cycles in the commodity chip market, just constantly sweating to try and maintain 30% gross margins. But then, fast forward to late 2020. Under CEO Hassani El-Khouri's super aggressive Fab-Right strategy, the company literally shed $2 billion of low-margin legacy business. Talk about trimming the fat, right? Now we're looking at a hyper-focused leader targeting incredibly resilient 38 to 45% non-GAAP gross margins.
To actually hit those premium margins, they fundamentally restructured the whole company into what you can think of as the muscles, brain, and eyes of electronic systems. The Power Solutions Group, that's the muscles, doing the heavy lifting for things like EV inverters. The Analog and Mixed Signal Group is the brain, basically dictating how all that power moves. And the Intelligent Sensing Group acts as the eyes, dominating market share in advanced driver assistance systems with their Hyperlux sensors. So they aren't just selling some random part anymore. They're selling the whole shebang, a complete, highly profitable integrated solution.
Moving right along. Section 2, financial health and cash flow.
$1.4 billion. Let that sink in. That represents their 2025 free cash flow. And what's truly mind-blowing for equity investors here is that they achieved a record-high free cash flow margin of 24%. I mean, they generated this massive pile of cash despite operating in a pretty tough demand environment and an actual cyclical trough in the auto market. It just goes to show you that their new margin floors are incredibly resilient.
And what exactly are they doing with all that cash? Well, they've authorized a massive $6 billion share repurchase program over the next 3 years. Get this, onsemi actually returned 100% of their annual free cash flow straight back to shareholders in 2025. Honestly, seeing a company exit a huge capital expenditure cycle and immediately pivot to returning this level of capital, that is a massive signal of both financial health and supreme management confidence.
And this cash generation didn't just happen by accident. It's driven by a massive strategic shift away from low-end consumer goods. Today, automotive makes up a massive 51% of their revenue, with industrial right behind it at 28%. They've essentially re-architected their entire revenue stream from the ground up to capture the absolute defining megatrends of our generation, which are vehicle electrification and Industry 4.0 automation.
Okay, let's get into the tech side of things. Section 3, the Silicon Carbide advantage.
Now, to really grasp the financials, you kind of have to understand the material making it all possible. Silicon Carbide, or SiC for short. Compared to your traditional silicon, SiC lets these systems operate at way higher voltages and temperatures. But what does that mean for the real world? It translates to much smaller component footprints, radically faster EV charging times, and massively lower energy losses. It's basically the mandatory absolute backbone required for the whole industry's irreversible shift toward 800-volt EV architectures.
And here's where they really shine. Unlike a lot of competitors who have to rely on external suppliers for raw materials, onsemi owns the whole process. Thanks to their totally visionary 2021 acquisition of GT Advanced Technologies, they actually grow their own silicon carbide crystals, called boules, completely in-house. Then, they handle the wafer processing, and finally, they do the module packaging. This vertical integration is a massive moat. It captures significantly more profit margin, and crucially, it completely secures the supply chain for Tier 1 automakers who absolutely cannot afford any production delays.
Plus, this tech drives what management likes to call a triple bottom line approach, meaning they focus on people, planet, and profit.
In fact, they generated roughly $4.68 billion, which is a staggering 78% of their total 2025 revenue, specifically from intelligent products that drive decarbonization and sustainable efficiency all across the globe. Pretty impressive, right?
All right, looking ahead. Section 4, AI and growth catalysts.
So 2026 is just packed with massive growth vectors for them. Right out of the gate in the first quarter, onsemi reported a 30% sequential growth in their AI data center business. By June, boom, they were added to the Russell 1000 and mid-cap growth indexes, which brought in this whole new wave of fresh institutional attention. But the ultimate catalyst? That's slated for late 2026, the full scale-up to 200mm silicon carbide wafer production. Moving to these larger 8-inch wafers increases die yield by roughly 80%. That drastically reduces their unit costs and acts as an absolute engine for margin expansion.
But it's not just about cars anymore. Beyond electric vehicles, their next massive frontier is powering the AI data center revolution. Think about it. The explosive demand for liquid-cooled, high-density server racks requires exactly the kind of vertical power delivery modules that onsemi produces. Because power density needs are basically doubling every 2 years just to keep up with AI processors, onsemi's transition to ultra-efficient power architectures opens up a multi-billion-dollar total addressable market entirely outside of the auto sector. It's a real game changer.
Finally, we got to look at the whole picture. Section 5, Risks and Long-Term Outlook.
Okay, as objective investors, we really have to weigh the bull and bear cases side by side. On the upside, management has secured these incredibly strong multi-year long-term supply agreements with absolute giants like Tesla, BMW, and Hyundai, which creates these really solid revenue floors. Combine that with the 200mm margin expansion and the massive AI boom we just talked about, and yeah, the bull case is crystal clear. But on the flip side, with over 50% of their revenue tied to automotive, any prolonged global recession hitting car sales, that is a genuine risk. Also, investors definitely need to monitor the geopolitical concentration risk of their massive investment over in South Korea, not to mention the inherent technical yield risks of actually scaling up to those larger wafers. But taking a step back, as one industry observer really perfectly noted, onsemi has successfully shed their commodity past. Through ruthless vertical integration and incredibly disciplined capital allocation, they've positioned themselves not just as a chip maker anymore, but as the essential picks and shovels architect of the entire modern electrification infrastructure.
It really is a truly fascinating narrative of corporate reinvention. You'll hear analysts frequently cite onsemi as a growth at a reasonable price, or GARP, play, compared to its legacy peers. As we sit back and watch their multi-billion-dollar share buybacks and that super aggressive push into AI data centers, it leaves us with one incredibly compelling question to ponder. If they can flawlessly execute this 2026 AI and silicon carbide catalyst phase, is onsemi the absolute ultimate equity power play for the next decade? I'll leave you to think on that. Thanks so much for joining me on this explainer, and keep learning.